Hello, welcome to our monthly performance monitor. My name is Colin Beveridge, Chief Investment Officer at True Potential. Now, August was a good month for risk-based assets like equities. They're performing well despite a backdrop of continuing geopolitical tensions. In bonds, it was the higher risk categories like high yield and emerging market bonds that produced the best outcomes. Sterling weakness also contributed to a generally positive return for multi-asset investors. In fact, the pound fell by more than 2% against both the euro and the US dollar. Now, this produces a sizable tailwind effect, boosting returns from global equities from 0.2% in local currency to 2.5% in sterling. In terms of individual equity markets, US stocks reached new record highs in August. Sales of US goods, helped by a weakening dollar, boosted corporate profits. This is like what is happening here at home, with UK multinational companies also gaining a competitive advantage from sterling weakness. In the UK, equities and gilts returned 1.7% and 1.8% respectively over the month. This was despite ongoing worries over Brexit. In fact, investors appear to have concluded that potential interest rate rises will be pushed further out to ensure maximum support for the economy as negotiations over exiting the union unfold. Elsewhere, economic activity is picking up across Europe. This is self-feeding, with European business confidence surveys reaching new highs. The euro has also significantly strengthened, helping enhance returns for UK investors owning European shares. This month, European index returns in local terms fell by 0.4%, but were up 2.5% in sterling. Looking ahead, analysts are pondering the effects of a strong euro and whether it will impinge on the competitiveness of European businesses selling goods internationally. So far this year, the major developed equity markets in the UK, Europe, US and Japan have all proved rewarding. However, in just August alone, emerging market equities returned 4.6%. Emerging market bonds also proved attractive, producing a return of 3.9%. In fact, for the whole of this year, returns from emerging market equities now exceed 20%. The key drivers propelling emerging market returns are a weakening US dollar and a supportive global economy. Improved economic data from China has also been a key driver behind Asian market equity returns. In August, Asian equities lagged EM equities, but only slightly, delivering 3.4% in sterling and 1.1% in local terms. In commodity markets, tensions in North Korea pushed gold to a 9-month high, with investors purchasing safe haven assets. Hurricane Harvey in North America is also causing massive disruption to oil refineries, transportation, and energy infrastructure. This has put pressure on the supply of gasoline, causing prices at the pumps to soar 15.2% over the month. As usual, keeping track of so many events taking place globally and spotting profitable trends is extremely challenging. The strong and special relationship we have with our 8 world-class managers makes implementing advanced diversification across multiple asset classes, styles, strategies, and investments manageable. In our opinion, the benefits from advanced diversification remain steadfast. This is even more evident today when managers managing single asset classes are discovering that being concentrated in one area can deliver negative as well as positive surprises. Thank you for listening.
Welcome to this month's review of the True Potential portfolios. My name is Barney Hawkins. I'm the Investment Director here at True Potential, and I'm going to spend the next few minutes talking about our flagship investment product, the True Potential portfolio range. First, let's start by discussing the performance of the portfolios. We'll then look at what are the key themes we're seeing from our fund manager partners, and finally discuss what changes have been made over the month. During August, the portfolios have produced some strong positive returns, with equity markets, particularly in Asia and emerging markets, driving performance. Looking further back, the True Potential portfolios all show double-digit returns since inception, with investors clearly being rewarded for taking risk. Looking in depth at how the funds have performed, we've seen some strong returns from the True Potential SEI and UBS fund ranges. SEI's exposure to Asian and emerging market equities boosted their performances, while the True Potential UBS fund range continues to deliver healthy returns, a key driver being the currency fund, which sits within the UBS investments and which has consistently provided a good source of returns, uncorrelated to equity markets. Moving on, as you know, we speak to our fund manager partners at least monthly, looking for key themes and tilting our portfolios towards those areas that offer the greatest potential. In general, our managers continue to be reasonably constructive with regard to market conditions. Those managers which invest in direct equities, so Threadneedle, Close Brothers and Goldman Sachs, remain fairly sanguine about markets and are still able to find attractive opportunities despite valuations generally being high. Discussions with our managers continue to focus on central bank monetary policy and the timing of any hike in interest rates or the reversal of quantitative easing. Our managers expect central banks to tread cautiously and don't necessarily see an upward move in rates as a catalyst for an equity market sell-off. While inflation may continue to edge up, the consensus is that it will not get as high as official forecasts, and so most of our managers are content to keep holding some exposure to bonds for portfolio protection and to generate a secure return. They recognize that stock market valuations are high by historic standards, but take heart from the knowledge that both retail and institutional investors retain substantial funds on deposit awaiting investment, and they believe that any downward correction will be treated as a buying opportunity to invest some of the cash which is sitting on the sidelines. In terms of trading over the month, no changes were made to the positioning within the True Potential portfolios. Discussions did take place around potential changes to allocations. However, the underlying fund managers have been repositioning themselves in a way that resonates with our current thinking on markets, and so there was little need to compound the effect by making changes to fund allocations within the portfolios. Furthermore, last month we were fairly active in changing the allocations, and so made the decision to let those changes bed in and to leave the weightings unchanged this month.